Welcome to 17 Balls, where freedom starts with your next move. Today we'll be talking about ETFs versus index funds. So let's get into it. Okay, let's start with index funds. The Vanguard 500 index, the Schwab S&P 500, the Fidelity S&P 500, and the Vanguard Total Market Index. As you can see, the first three are pretty much identical, just different brokerages. And then the Total Market Index, that obviously covers the total market, meaning large cap, mid cap, small cap, pretty much everything. Whereas the first three are just the top 500 US companies. Here's some popular ETFs. Funds like SPY and VOO track the S&P 500, QQQ, which tracks the NASDAQ 100, and VTI tracks the total US market stock index. Okay, some of the key differences. ETFs are more flexible. What I mean by that is they trade all day like a normal stock. I mean, you can buy it and sell it at any time of the day, at least while the stock market's open. And they're often more of a tax shelter, meaning they're more tax efficient. Index funds are a little more simpler. You just kind of set it and forget it. Just put your money in there and not worry about it. What I mean by that is when you invest in an index fund, you don't buy it until the market closes for whatever that value is. So if the value, say it starts out at $200, and at the end of market trade, when the market closes, say it goes up to $250, that's what you end up buying it at. So they're a little bit different in that way. Index funds sometimes distribute capital gains if the fund has to sell stocks internally. This distribution usually happens at once a year, towards the end of the year, typically December. And investors may owe taxes even if they didn't sell anything. So that's the reason why ETFs are a little more tax efficient versus index funds. Also, one note, in retirement accounts like IRAs and 401ks, this usually doesn't matter because taxes are deferred. At the end of the day, the truth is both ETFs and index funds are great tools for building long-term wealth. And honestly, the most important thing isn't which one you pick. It's as long as you stay consistent and keep investing. That's what counts. Thanks for watching, and until the next one.